Have you ever looked at a trading chart and felt like you were staring at a foreign language? Like there's a secret conversation happening right in front of you, but you can only hear static? You see the lines, the candles, the numbers jumping around, but the real meaning, the why behind every move, feels just out of reach. What if I told you that feeling is the single biggest obstacle between you and consistent trading? Not your strategy, not your broker, but your perception. Because here's the unspoken truth that separates the hopeful from the profitable: a chart is not a price tracker. It's a living, breathing echo of human psychology. Every flicker, every surge, every agonizing pause is a direct broadcast from the collective mind of the market. And today, we're going to learn its language. Think about this. When a market crashes, what's really happening? It's not just numbers falling. It's a tsunami of fear, panic, and desperate clicks. When it rockets up, that's not just an algorithm running. It's a frenzy of greed, FOMO, and euphoria playing out in real time. The chart is merely the canvas. The candles are the brushstrokes of emotion. Your job isn't to predict the future. It's to become a master interpreter of the present, to read the story as it's being written, paragraph by paragraph, candle by candle. Let's start with the most fundamental concept, the one most people get catastrophically wrong: the trend. A trend isn't just a line going up or down. A trend is the market's declared intention. It's its current core belief. When you see a series of higher highs and higher lows, each candle closing with conviction, you're not just seeing an uptrend. You are witnessing a crowd of buyers operating from a place of deepening confidence. They are in control. Their psychology, optimistic, aggressive, bullish, is dictating the narrative. The opposite is true for downtrends. It's a controlled sell. Off. A collective agreement that lower prices are justified. The trend tells you who has the microphone on the main stage. Ignoring this is like trying to swim upstream in a raging river. You might get a few feet, but the current will eventually win. But intention doesn't move in a straight line. It breathes. It fights. This is where market structure comes in. The skeleton beneath the skin. Swing highs and swing lows aren't random peaks and valleys. They are battle scars. A swing high is the exact price point where buyers finally ran out of ammunition, where their confidence met a wall of selling pressure. A swing low is where sellers exhausted their influence and buyers found the courage to step in. These points create the market's memory. They form the framework of support and resistance. And this is critical. Support and resistance are not thin lines you draw. They are emotional war zones. They are psychological territories where past battles were so fierce that the market remembers them. Imagine a key support level. Price is falling toward it. What's really happening there? It's not a magical line. It's a place where, in the past, buyers stood their ground and won. Their confidence was validated. So when price returns there, it's revisiting a site of past victory. There's a collective memory, an emotional anchor. The candles will often slow down, hesitate, or show strange wicks right there. That's the chart whispering. This matters. Something is happening here. The same is true for resistance. It's a sealing of past seller victories. Understanding this transforms your chart from a graph into a topographic map of collective memory and pain. Now, let's talk about the alphabet of this language. The candle. Most traders see a green or red rectangle. A master sees a novel. The body of the candle? That's the decision of the trading session, where price opened and where it chose to close. A long, strong green body is a decisive vote for higher prices. But the wicks? The wicks are the hidden story. They are the drama that happened during the session. A long upper wick on a green candle? That's a story of failed ambition. Buyers pushed price way up, but before the session ended, sellers marched in and said, "Not so fast," pushing it back down. The buyers still won the day, But it was a Pyrrhic victory. They revealed their weakness. A long lower wick on a red candle? That's a story of a miraculous defense. Sellers were in control, crashing the price down, but buyers staged a fierce counterattack by the close. The sellers won. But the buyers showed incredible resilience. When you start reading the wick, you're reading the subtext. You're seeing the struggle that the final price alone tries to hide. This leads us to the two great validators, speed and volume. Speed is emotion's thermometer. A fast, sharp move with consecutive strong candles is panic or euphoria in motion. It's a market that has made up its collective mind and is acting on pure emotion. But a slow, grinding move? That's caution. That's uncertainty. It's a market that's thinking, not feeling. The difference is everything. One is a stampede. The other is a careful negotiation. And volume is the lie detector. Volume tells you how many people are behind a move, how much conviction there is. A price shooting up on pathetic volume is a hollow rally. It's a few loud voices in an empty room. It has no staying power. It's a fake-out waiting to happen. But a modest price rise on soaring, explosive volume? That's a groundswell. That's real money moving with real belief. That's the truth. Volume confirms the story the candles are telling you. A breakout without volume is a market bluffing. A breakout with thunderous volume is a market making a declaration. This is where the magic starts to happen. You begin to see the setups before the explosion. You notice when candles start to compress, getting smaller and smaller, trading in a tight range with volume drying up. To the untrained eye, it looks like nothing. Boring. But to you, it looks like a spring being coiled. The market is taking a deep breath, gathering energy, building tension. Buyers and sellers are in a temporary stalemate, and the pressure is building. Then, the first strong candle breaks out of that compression on high volume. That's the spring being released. That's not a surprise, it's a confirmation of the energy you saw building. You also start to spot the deceptions. The false breakouts. They almost always share the same tragic flaws. They happen on low volume. The candle that breaks the level looks weak or has a huge wick, and it has no follow-through. It's a market tapping on the door, but not having the strength to kick it down. The inexperienced trader chases that breakout and gets trapped on the wrong side. The master reader sees the lack of conviction, the hollow volume, and stays out. Sometimes, the most powerful trade is the one you don't take. As this skill deepens, a profound shift occurs. You stop looking at the chart and start listening to it. The cacophony of noise, the financial news, the fear in your gut, the greed for the next big win, fades into the background. In the silence, the chart begins to speak clearly. You'll see a cluster of small, indecisive candles with long wicks camped at a major resistance level. The chart is no longer showing you price at resistance. It's telling you, there is a massive seller here. A giant is defending this price. Every attempt to break through is being swatted down. That's not data. That's intelligence. You'll see a long, brutal red candle crash into a support zone, but it closes with a tiny body and a massive lower wick. The chart isn't just showing a bearish candle. It's screaming. The sellers threw everything they had at it, and the buyers absorbed the entire blow and fought back fiercely by the close. The selling may be exhausted. This is the ultimate goal, to reach a state of flow where you're not analyzing. You're comprehending. You feel the market's fatigue after a long run. You sense its hesitation at a critical juncture. You recognize its confidence when it finds acceptance at a new price level. The chart transforms from a tool into a companion, communicating with you in a language of energy, intention, and collective emotion. The final, and perhaps most liberating, realization is this. The market is not your enemy. It's not a machine to be hacked. It's a mirror. It reflects back every ounce of your own psychology, your patience, your discipline, your fear, your impulsivity. When your mind is chaotic, the chart will look chaotic. When your mind is quiet and observant, the patterns, the signals, the story become staggeringly clear. Mastery of chart reading, in the end, is inseparable from mastery of self. You are not learning to decode the market. You are learning to decode the human heart, as it is reflected in the most honest, real-time financial mirror ever created. And when you finally see that reflection for what it is, everything changes.